Mark Espy once again, and we're taking a look at the SPX, the Standard & Poor's 500. Again, I must remind everybody this is for educational purposes only, not meant to be a recommendation or advice to buy or sell anything. Very similar analysis as to what we saw on the Dow Jones Industrial Average. Interesting to note here that the breakdown really occurred out of a symmetrical triangle. We had narrower range trading days as we move forward to that breakdown, and there was a level of support right here, which if extended moved all the way through the point to the breakout, and it did close below there, and it closed there on an increasing volume. Again, we had a spinning top narrow range trading day as a follow-up day, and that was on Wednesday the 5th, and then we had the craziness that occurred on the 6th, which was the fat finger day and all the issues involving computers and so forth, and it's spiking all the way down. As I had indicated in the Dow, I'm not paying or heeding much attention to this spike down. I don't think there's a lot of credibility associated with it because it was not technically related. The area that we find right here, though, on the follow-up day, and that spike down, I am going to recognize, and there is market symmetry. With that, if we extend that, it comes pretty close to lining up with the bottom of this channel also back here in December. So in terms of defining a range, I think the lower edge of the range is just below 1100, maybe 1095 on the downside, and the upside being the low of the channel or the breakout that occurred last week. So that's a wide range, as we had indicated also in the Dow. But until the market narrows it up and begins trading a little bit narrow and coming off of these big days every day that we're seeing, these big trading days, and begin to be a little bit more reasonable in the way it trades, then we have to recognize this as a channel going sideways. But I'm thinking that it's going to narrow up as maybe some volatility hopefully becomes a little bit more reasonable going forward. The VIX I had mentioned to you before is up above 31 once again. So there is interest in buying puts in protection to the downside, and there is some fear and uncertainty in the market right now. So let's kind of watch it trade here in this range and see if it does in fact begin to narrow up the channel a bit. We have this, actually this is above where we're currently trading, which is at 1150, just 15 points below. But that should act as resistance, in fact, coming back up this way since we've just recently closed below there. The channel needs to be recognized back here in December, and obviously this spike low right down here. On the upside, we're looking at the low of the channel on the upside. The stochastics is looking like it's turning over a little bit, and no help on the MACD. It's south of the zero line and continues. The histogram started to come back toward the zero line, which is an indication of momentum, but has actually flattened and may actually widen once again as this continues to go down. My feel is that we will continue to move down, and it would not surprise me to come all the way down here to the 1100 to the 1095 area and test the low that was put in on last Friday, the day following the May 6th event. Okay, so with that, we're going to go over and look at the comp Q.